Okay guys, today I'm going to be sharing with you a strategy that I've used over the last 4 years quite successfully. The success ratio of the strategy is somewhere between 75% and 80%, but I do recommend you to go back and do some back test on it and maybe initially apply it in a demo mode before you take it on to real trading. The strategy is relatively less risky, but once again, I always say protect your capital and the money will find its own way. So you will make profit as long as you can stay in the game with capital protection. Now, there are 3 rules to this strategy, 2 indicators that we're going to use and 3 rules that we're going to apply to those indicators. The first one indicator I want is a moving average of 200. You can use simple moving average, you can use exponential moving average, you can use medians, close, open, whichever. It's a reference point, so it doesn't really matter that much, because what we need to see is that the moving average and that the price has moved significantly far away from the moving average. The second indicator we're going to use is the normal RSI, but with one change. Instead of the regular normal 70 and 30, what we want to put is the 80 as the upper band and 20 as the lower band for oversold and overbought condition. Now the 3 conditions that I want to have is, the first one is price very stretched away from the moving average. Secondly, a big run up or down without any major pullback. And third, RSI to be above 80 or below 20. These are the 3 rules that we're going to use to enter the trade. And then I'm going to talk about how to set profit targets and how to set stop loss. So let's use CAD JPY for our example because it's on the screen. Now what I see here is a huge move up. And of course I start noticing this huge move up somewhere around here, somewhere around here. But then what I'm still looking for is the price to be very far away. Here, to me, the price is not that far away from the 200 moving average. Here it starts to seem like, yes, it is massively far away from the 200 moving average. It's very stretched. The second is the RSI to be above 80. And in this case, it meets here. And thirdly, I want to see a huge run up without any pullback. So for this for me is a lot of choppy action with a lot of pullbacks. Not interested. I want to see a huge sudden move. So depending on or based on these 3, I would normally look to enter the trade on short somewhere around here, because here is where I see, let me delete it again, this area is where I see that the price has had a huge run up, is very far away from 200 moving average, and it is above the RSI of 80. This is where I would look to get into the position. So my position is going to be somewhere around here. I will enter a sell trade. Now I would look to set up a stop losses and take profit. And the way I'm going to do it, well, let's remove it for now so we can first talk about how do I. So saying that I enter the trade here, I'm going to use a Fibonacci, and from the bottom of the move, I'm going to go all the way to where I'm entering the position. And my take profit is going to be at 23.6. Most of the time I've seen the price come back 23.6 at least before continuing up. Again, guys, remember it's a counter trend strategy. So you are expecting the trend to counter or to start or to keep moving up again. You're not looking for a reversal. You are not looking for a reversal. You're looking for a pullback. But quite often I've seen it come down to 38.2 as well. But to be safe, I like to remain somewhere between 23.6 and 23.8, depending on where I see, if I see some sort of a structure a support level in this area. Here I don't see a support level, so I'm going to go ahead and I'm going to pull my enter the trade somewhere around here where my conditions are met. My take profit is going to be 23.6 and my stop loss is going to be 1.5 risk to reward ratio. So 1.5 risk reward ratio. This is where I enter the trade because this is where my conditions are met. Once again, price very stretched away from the moving average. Yes, it is very stretched away. A big run up and down without any pullback. Yes, it's a huge run up without any pullback. RSI to be above 80. Yes, it is above 80. Why did I not enter the trade here? Is because I didn't see that the price is very far from the 200 moving average. It is relatively stretched, but not massively. Not interested still. I see here, for example, it's a huge run up, not major pullbacks. And I see that the price is very far away from the moving average, somewhere around here. And the RSI is above 80. We'll look to enter the trade here. Setting up my targets from the bottom to where I'm entering the trade. This is where I would enter the trade. This is where it is 80. You can see this is where it starts to enter the 80. This is where the price is very far away from. It's not far away here, not that much. Here it is massively far away. I'm going to look to enter the trade somewhere around here. And my profit target is 23.6 and my stop loss is 1.5. This is where I would enter the trade. This is how the trade will pan out. Now, the other thing which I did say is you can look within this area for a support and resistance. So I do see that there is a small support here. So I might want to stretch the target to this point if you follow. If you don't follow, if you do not understand this point, go for 23.6. If you are unsure about things, go for 23.6. But the price does many times come down to 38.2 or come down quite a bit in this area. So I look for the first support area. To me, this looks like the first support area. So I can set up the target here, which gives me a little bit of a bigger stop loss. This is how I will set up this trade. Now, these are two sell trades. Let's look somewhere where we can find a trade where I would enter in a long position. Well, this one, yes, huge rundown without any major pullback. Where does it hit 80 is on this candle. This is where it hit 80. So this is where I would be entering the position. Now, to set up my position, I'll first see how much profit and loss ratio looks like. This is probably where I would have entered the trade because this is where it hits 80. You can see, yeah, this candle is where it would have hit 80. This is where I would look to enter. Now my stop loss and take profit is going to be, this is where I would have, somewhere here, I would have entered the thing. I would have entered the trade. I would have set the target to 23.6 and the stop loss to a ratio of 1.5. Go back for more. Look here, all of this, I do not see a massive move down. I do not see price very stretched away. Here the price did stretch away massively from the moving average. You can see it did move massively from the moving average. It came very close to hitting the 80. Didn't hit it though. The conditions are somewhat met. It's a massive move down. But what would have happened here on this day is I would have been waiting for the RSI to hit 20. And because it never really came to 20, it came to maximum 22.4. I would have missed this trade. If this trade had come down a little bit more, maybe until here where it hit the 80, I would have entered the trade. And just for hypothetical sense, I would have entered the trade somewhere around here, because this is where it would have hit 20. It didn't hit the 20. It came down to here. It didn't hit the 20. But hypothetically speaking, this is where it would have hit 20. I would have entered the trade here, and I would have set my target to 23.6, and I would set up my stop loss to 1.5, this 1.5, somewhere close to 1.5. I mean, my mouse is acting up a little bit, so yeah, somewhere around here I would have entered this trade. But this trade I would have missed just because it never came down to 80. Now on this, it never came down to 20. Now on this, where it did come down to 20, here the first condition is not met. The price is not massively away from the 200 moving average. So I wouldn't have entered here, even though it's a rundown, even though it's not a massive rundown. So we're not just going by RSI. We're not going for 80 or 20. We are looking for three conditions. Let's go back even further. Yeah, here it hit. You see, here it hit 80. Is it a massive rundown from here to here? Well, you can argue. I might have entered this trade. I might not have entered this trade. It's not exactly how far stretched I like to see. But let's assume if I did enter this trade, I would have entered the trade somewhere around here, because this is where it hit 80. This is where it hit 20 on RSI. And I would have put my take profit to wherever is the first support level in this yellow area between 23.6 and 38.2. So here, this is the first support area or resistance area, however you want to call it. It would have been somewhere here, my take profit, and my stop loss would have been to 1.5. And this is how I would have set up this trade. Now this setup works up and down both direction for Forex markets, because Forex markets move up and down both. If you are going to trade stocks or indices, then indices move up more than they move down. So you're only looking for short selling. Let me see if I can find an example here on US 500. Look here, for example. Oh, and my screen is acting up. Just bear with me, guys, 1 second. Sometimes my screen does this. Let's see if it works. No. Okay, fine. This is better. So, for example, here, it's a massive run, up, up, and up. The price seems a little stretched. It's still not 80 here. So my second condition is not met. So I wait for further up, 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 until here. Maybe it is very close to 80. I see, yeah, somewhere here it hits the 80, 79.7, 79.7. Let's assume that it hit 80 here. Let's just assume for sake of this tutorial. So I would have looked to enter the trade short here. I would look for the run all the way to here. This is where it hits 80. I would have entered a short sale, short position here. My target would be the first support level, resistance level within the yellow area, and if I'm unsure, go to 23.6. If unsure, go to 23.6. But let's just, for sake of assumption, I see that the support area or the resistance area is somewhere around here. So this is where I set my take profit, and then I set my stop loss to 1.5. This would have been my trading setup. Now I see that the price has run massively again from here all the way to here, but never even came close to hitting 80. So not interested. It's coming to 80 here, not interested. Still not interested. Let's go back a little bit just to see. No, didn't come to 80, came very close, but didn't come to 80. Secondly, it's not a massive run up and the price is not far from the 200. So there is a little bit of okay. Now here also, the price ran down massively down, hit 80, hit 20 or below 20. So somewhere around this point where it would have hit 20, I would have entered the trade. I see a massive run down. I see the price is stretched. It's very far away from 200 EMA. And there have been no major pullbacks. And the RSI is 20. Enter here, take profit to 23.6. Well, I'll look for if there is some support level within this yellow area between 23.6 and 38.2. I don't really clearly see any support level except for here, 38.2. I could have gone for 38.2 because yes, it is a resistance level which is borderline 38.2, but I'm a bit conservative. I would go for 23.6. If you are feeling a bit adventurous, go for the first support area or first resistance area in this portion between here, and it is right at the bottom, right at the mark 38.2. So let's say if we went risky, here is the setup and the take profit to 1.5. This would have been my trade going in. So guys, this is the setup. These are the rules. It's a very simple setup, very easy to see. Now the way you can screw up this strategy is if you compromise on any of the three rules. And I'm going to type them again. If you compromise on any of those three rules, you're going to have a hard time. The first one, price very, and I'm writing in bold, very stretched and far away from 200 EMA. 2, no major pullback, is a big one-way move up or down. And third, RSI above 80 for sell and below 20 for buy. Setting take profit and stop losses. Look for the first support level or resistance level, whichever way you want to call it, in this area. If you don't see, if you are confused, if you're not sure, go for 23.6. Go for 23.6 and set up your stop losses to 1.5. Now, if you are an advanced trader with a bit of experience within the Forex markets, I'm going to speak a little bit more about what you can do further with this strategy. If you're new, if you are not very experienced, have not traded more than 3 to 5 years in Forex profitably, stop the video, exit now, do not listen any further. Okay, if you're still here, then I'm assuming that you are interested in listening to one more thing that you can do with this strategy. It is basically because we are entering the trade at extreme levels of price action. So we are very close to 100% sure that there is going to be a small bit of pullback. And this is why we are entering. So one thing you can do is, instead of putting a hard stop loss at, let's say, 22.40, you put a mental stop loss. I wouldn't do it with indices. So let's go back to our example of CAD JPY. And my screen is starting to act up again. Okay, here. Only with forexes, because forexes do go more in pendulum move than sudden moves. What I could have done here when I entered the trade is not set a hard stop loss, but have a mental stop loss, which is if the price comes close to 88.7, I look for a small reversal to close it a little bit closer. Same goes here. Instead of setting up a hard stop loss at 93.80, I might have just in my head put a stop loss of 93.80. That is, the price moves up against my trade and comes down to, I don't know, in this area. Then I will look for the first opportunity to close the trade as soon as it gets back. So minimizing my loss. This is one thing which I have learned to do over the last 4 years, to minimize my losing trades. But once again, I do not advocate not having stop losses. Please have stop losses, either mental. Hoping is a very bad thing. You don't need to have a hope, you need to have a plan. But this is it, guys. One more thing which I can say is basically, look, once your trade starts to move in your direction a little bit, maybe come down to like half of your take, you might want to move your stop loss down to break even. It's a good thing, it's a bad thing. It's a good thing because you are covering your risk, but it's also a bad thing because what can happen, for example, here in this case, the price starts to move down here, and then you move the stop loss down to 0, and then the price comes and hits your stop loss, and then it actually goes and hits your TP, and you're frustrated. For a simple trade, it's going to be somewhere between 75 and 80% success ratio anyway, if you follow these steps very, very closely. So yeah, keep your stop losses, keep your take profit, take the profit, go enjoy it. And I'll be coming back with more strategies that I've used over the last 13 years of my trading experiences. Please do hit the subscribe button, please hit like, please comment if you find anything which is unclear in this video, if you want to have a little bit more explanation on things, and I will follow up. This is the first video that I'm uploading on the internet. I have a 13-year experience in trading, but this is the first video that I'm uploading, and I'll see how it goes and then decide whether or not to share more of my experiences in the Forex market. I'm not promising quick ways to millions. What I'm saying, or what I'm promising, is I'll come to you with non-bullshit education. But please do hit subscribe, please do hit like button, and please do comment, so that at least I know that the effort that I'm putting into sharing the knowledge that I've gained over the last 13 years is actually helping someone. Well, thanks a lot, guys, and hopefully see you next time.